How's it going? This is Len Nevin with Loyalty Home Group at eXp Realty. Today is April 15th, 2021, and we are going to talk a little bit about some, go shocker, real estate. It's been a little bit since I've done a video, and it's mainly, honestly, I've been just crazy busy, and I haven't had time to put together any data information. I still follow the data every day, but, putting this together takes a little bit of time. I just been so swamped, haven't been able to. So I do apologize that I haven't been able to get any of this information out to you sooner, but better late than never, right? So let's dig in. How do I explain it? Things are a little bit unusual, and I don't want to say unusual in a bad way, depending on who you are, right? So in a nutshell, what we're seeing is almost every property's going crazy, right? So you have, like, we had Tim on our team meet with the seller yesterday. The house is trashed, right? Like, there's stuff everywhere. It needs to be cleaned out. It's not trashed in a bad way, but it needs to be cleaned up, ready to go. And this house had previously been for sale years ago in a normal market, and it didn't sell. And so the conversation we're having today is, any house will sell now in this market. Question is, can you bring the right buyer? And can you close it? So there's multiple latitudes on this conversation, because some people have the impression that, well, everything will sell, so we can just put it up and we'll just take whatever. This is where maybe I'm trying to pat myself on the back or create value where maybe it doesn't exist. But in my opinion, in my experience, what I'm seeing is that the highest offer isn't always the best offer. And so one of my jobs when I'm talking to a seller is, how do we really arrange this, and how do we really look at this and the multiple offers that we're getting to really make sure we pick the right one. For instance, there was a home that a buyer of mine we bid on a few weeks ago, and we didn't get it, and they were bummed out, like, oh, I can't believe it. And it was listed at 300. It needed some work, and ended up going north of 350 based off the conversation I had with the listing agent. And so, they were a little bit deterred, and they were like, oh, this is, they were kind of bummed out, and it almost turned them out of the market. And then yesterday it comes back on the market, and I reached out to the listing agent. I said, hey, what's up? And he said, well, the buyer basically, there's too much work to be done. And so the conversation I had with my buyers, I said, look, we didn't offer 350. We offered much less than that. We offered still probably about 10, 20 above the most recent comp, which, does account for the increase in values that we've seen. But my guess is that at 350 plus, there was too much work that needed to be done. But at our offer, which we already knew there was work to be done, it wasn't so bad. So we're resubmitting, and we're going to see if we can pick it up this time. So that's our goal. Wish us luck. But that's just kind of what we're seeing, right? And so we got to have, I look at it from the listing agent's perspective, and my guess is that they just chase the top dollar amount, right? It's like, oh, this one looks good, 356, 357, oh, we're up to 360. I don't know where it went, I'm just making this up. But you can't always just go after the highest number. You have to also look at, like, the moving pieces and how's this going to go. Have a conversation, communicate with the other agent, and say, look, I want to do this deal here because I think this will actually close. Because here we are, this agent was already projecting to close, and now he's starting from scratch. So that's that. So let's look at some stats real quick. I've been looking at these all morning. I just wanted to share a few of what I've been finding and my opinions on them, and kind of go from there. So here we go. Here is the beautiful Cromford report that I love to study on a daily basis. And so if you look, what we're looking at right here, and let me just pull this out since there's a lot of noise going on my computer screen. And what we can see is, this is the chart called daily days of inventory, right? And so it's tracked. This right here, it's probably hard to read, but it says June 2011. So you basically have a 10-year look at days of inventory. Now, 2011 was what we would call the bottom of our market. That was when, right here, you can see the inventory started to drop, and that's when we started to see our recovery, the flip of, the downturn that we had in 2006, 2008. This is when you can track the recovery, and here it is. So that's that line that kind of shows you the recovery. Now, we saw that drop, and then it kind of came back up. And honestly, even when inventory was sitting here, we were still selling real estate real decently. I mean, good homes sold quick. We were, like it says, average days on market was 77 days. Wasn't that big of a deal, right? Not that big of a deal. So kind of trickle it down, and here we are today. We're sitting at 14.8 days of inventory. So basically, just about 2 weeks worth of inventory on properties that are available for sale. So it's a little bit tricky here. It's great for sellers. It's tough for buyers. And it's really just, it's more of an inventory issue that we're seeing more than anything. And I'll show you another chart that shows you what I'm talking about there. But when we look at, the active homes for sale, so that's the days of inventory, we look at our active listings, and it reflects the exact same conversation. And hang on, this thing loads, and you can see, this was COVID, this is just a 1 year period, and it drops, and then here we are, and you see these little kind of like, every weekend we get a spike in, new listings, and then it drops back down. And so we spiked, we were at 34, 33, and now we're down to 36, 39. And that has gone up a little bit. So last week was 36, 53 was the low, 36, 39, hang on. And this is as of the 14th, so this was as of yesterday, 36, 23. So we'll have to look to see where that ends up, after today. So it's not an active like today count, that just shows you as of yesterday. But the big one is, there's this thing called the Cromford Market Index, and basically what it tracks is the buyer demand. And so if we just go all areas and types, this is a daily chart, and it shows whether or not it's going up, down, everywhere in between. So here we can see that the index climbed for the last year, climb, and then it's been dropping over the last, really since kind of, it looks like that beginning of March, it started to flatten out and then started to drop. Now, remember when you're looking at this isn't, you're not watching a market crash here. Anything over 100 is what's called a seller's market. So when you're sitting at the 500 mark, even still sitting here at 492, you're still well above that 100 line. So below 100 you would call a buyer's market, above 100 is a seller's market. So we're very much indeed inside of a buyer's market. So don't be fooled by seeing this line dropping thinking all of a sudden like, oh, it's crashing. All it means is that the buyer demand is dropping. So here maybe you got 20, 30 offers, or say 30, 40 offers, and then we're going to scale down and we're only get 15 to 20. That's still 15 to 20. That's still crazy. We still see, prices jumping up like crazy. So if I can see, and I haven't looked at this one, so I'm going to be looking at this live with you, but if I look at the average sales price, if that gives me average sales price right here, monthly average by city. Let's see what this allows me to pull. And so you can see that since the last year, so we go back a year, to March of 2020, I mean, it shot up. But, this is a year over year comparison, but you can see the average price per square foot, or the monthly average, sorry, it's not price per square foot, monthly average sales price shot up like crazy in the last year. So anybody who's been buying, they've felt that. And, we have some strategies to help with that. The good thing is that like, so some of the things that we talked about, is like new construction. New construction has not caught up to this monthly average sales price. Now, the problem with new construction right now is that they're majorly delayed. There was an article written by, or like a letter that went out by one of the bigger local builders here, in the last couple weeks. And basically they were saying, look, our supply issue chain is majorly backlogged. Most builders are adding 3 to 4 months to their typical build time, because you still have to build the house in order, right? So the first delay is concrete is hard to get it like it used to be. So, you say, I want that lot, I want this floor plan. Great, you usually could be able to get the pad poured pretty quick. Now that's being delayed. And then the other big delay that we saw over the last year was sheet metal, HVAC, ductwork. That was delayed. So you'd be at a point where you're like, all right, we're ready to go, and we should be 60 days out, but then the HVAC contractor was 90 days delayed, and so now you just got pushed, 90 days further than what you wanted to be, and the house was just basically sitting there going, all right, I'm ready for you, whenever you're ready, here I go, and that caused some major delays. So that's kind of what's going on here in Arizona. Um, we're still recommending new builds. One of the things that, is scaring some of my new build clients is interest rates. Now, interest rates have been doing some bouncing around. You can see this blue line is that 30-year fixed arm. And a year ago, we were right back where we kind of started almost. We were at 3.3. And we just saw it kind of go do, 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 and it dropped all the way down to this 2.65. And people are like, oh, this is crazy. This is great. And then it started to come back up. And then, between, looks like here, February and then last week, so within, 6-week period, it jumped up to 3.18. And then it's dropped over the last couple weeks. So it dropped down last week to 3.13, then to 3.04. Now remember, when you're looking at these things, this is not, and this is just my disclosure, right? Don't think you can walk into the bank and say, I want 3.04, because that's what I saw in Len's video. There's different criteria that's going to give you that interest rate. Your debt to income ratio, your income, your credit score, payment history, job history. There's all sorts of different pieces that go into this. This is just kind of like a basis percentage rate that you can run off of and look at to kind of get an idea where things are going. And so if I'm sitting there and I'm shopping for rates right now, I'd be like, okay, maybe it's a good time. And what we've seen, in my opinion, is why we've seen it drop is we have seen buyer demand drop. When you look at that index that we looked at here where that was dropping down, that's a nationwide thing. These rates here, these are nationwide rates. This has nothing to do with Arizona, Illinois, Texas, Canada. Canada's different. But you kind of get the idea. Everything is based off of, supply and demand. I read an article yesterday, they were saying that mortgage refinance is down pretty tremendously. New applications is down. So as you see the banks not getting as many people coming in saying, I want a new loan, this is what you see. When people are going in like crazy, they're like, raise the rates, which is what we saw right here, right? We saw the highest demand right here. And so they said, all right, we don't need people. We're good. We can start charging more. As people start to walk away, you see the rate go back down. That's my opinion. It's just interesting to watch. You see it happen. And, it's almost like, it's kind of like it flips the opposite. If I go to, this back to that Cromford Market Index, I find it interesting. It like does the opposite. Load up. See, up and down. So as it's going down, you'll start to see that go down again. Oh, sorry, it mirrors. So it's up, comes down. Then now this was going down, but then as this started to go up, it went down. And this right here, this peak right here, this was a major surge in our market. Right here between January, this was just, the last 90 days was insane. And it's still kind of trickling through. And I just keep telling sellers, it's like, look, it's just a matter of time before, our inventory, as it's starting to flatten out, as we start to see the buyer demand drop, before buyers kind of figure out, hey, maybe we don't have to go crazy with this. Maybe we don't have to go 50 grand over. Maybe we can get away with 25. Maybe we can get away with 10. Because a year ago, I would say even as like September, October, we were still only going 5 or 10 over, and we were getting deals put together at 5 or 10 over, and that was good enough. Now people want 20, 30, 40, and that's kind of the standard. So we'll go back to that. I can't wait. I'm actually looking forward to it. Let's talk about Chicago real quick. Chicago's numbers kind of match, what we're looking at in Arizona. So same type of thing. So this is the monthly supply of homes for sale. That has dropped dramatically. A year ago, March 2020, we were at about, basically it was sitting at this 4-month, and it had been climbing up to 4 months, and now it's down to 2.7. So over a month's worth of inventory has been scooped up. And the easiest way to kind of see that is looking at homes for sale, and you can see that typically we were sitting. This is a 3-year arc right here, and we were sitting usually around like 42 to 43,000 homes in the entire Chicagoland area. and now it's down to 29,000. That's a big drop. And that is a big drop for it to just nosedive. And then of course you look at closed sales, same thing. This was COVID, and it's just shot up and continued to just build, 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 more, 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 more. People are scooping up homes like they can, as much as they can. Um, let's see how the sales price, same thing. It's just kind of, it was a little bit stagnant, and then it shot up. So, long story short, if you're a buyer in this market, you need to have some strategies. Um, Luckily, we actually have some really decent strategies for a lot of our buyers. Anybody who's under 400,000 in either the Chicagoland market or the Phoenix market, we have some really cool programs where we can basically make you a cash buyer through our program, and it's working really well for us. It's helping us, turn somebody who's like, look, I've got the minimum down payments, and a year ago I could have gotten them a home, and now I couldn't. I'm able to get them a home again through some of our programs. So reach out to me if you're interested in that. If you're a seller, we still got to be very, very, very strategic about how we price your home, and we've got some, great ways that we're doing it. We're always, the appraiser is always going to be part of the equation, so we have to position your home at a point where if we go too high to start, we're not going to end up with the right buyers, and then the appraisal still becomes part of the conversation. So we've got to put it right in that sweet spot where people are willing to move above and ask for waivers of appraisal. But if you don't position it right from the first step, you're going to put yourself in a very, very bad situation. I saw a home in my neighborhood that the agent didn't take any pictures. They listed the home. I saw the homeowner was inside of our Facebook neighborhood group, and he was saying, hey, we were going to go live today, but we decided to do a couple showings. We had 2 offers, full price offer. He was excited, and then it appraised, is my guess, because it closed at 35 or 34,000 less than what the asking price was. So I know he said he got a full price offer, and then it closes for 34,000 less. Why does that happen? And my guess is because they didn't create the right environment, that they didn't get the appraisal waiver, and the only way to get that deal closed was to reduce the price, which, you don't find out about that appraisal until about almost 3 weeks into the transaction. So you're a week and a half to 2 weeks away from getting your closing and being done, and then you get punched in the gut and saying, we've got to reduce this price 34,000, otherwise we walk. And most sellers have already made their plans with that, that money for the next step. So anyways, that's all I got for today. Reach out if you have any questions. If you're curious what your home would sell for in this market, please let me know. Do not trust Zillow. That is my biggest caveat right now. I'm telling people right now, Zillow has changed their format. They have usually about a 6 to a 9% fee that they charge on top of what they buy your home for. And right now what they've done is they took your estimate. So let's just say, just for easy math, your home is worth 500,000 and it could sell for 500,000. And a couple months ago, Zillow would have said your home is worth 500,000. Now they're saying it's worth 475 because your estimate is what they're willing to pay. So they're already discounting the price of your home through this estimate because they're saying, we'll give you 475 for it. No agent's commissions, right? None of that stuff. But then they're going to tack on an additional thing. So they're really kind of raking some people over the coals, as far as what they're offering, and it's just, I just don't see it being a good thing for consumers. So give us a call, give me a call, let me know what you want to do with your home, even if it's just a refinance. If you're looking for painters, carpet people, contractors, whatever, we've got great people both in Illinois and here in Arizona. So yeah, reach out, and anything we can do to help, that's what we're here for. Thanks.